Good afternoon and welcome to the end of day review for today. And today is Monday, September 30, 2024. So it's the last trading day for September. And for the Q3, it's the last trading for the Q3, and it's also right here. If we look at the option, is the option expiration day for the whole quarter. That's the reason why today we're gonna see when we look at the charts, we're gonna see the price move so beautiful in the sense that it moved very big move. That means that if we catch one of that move, we make a lot of money right there. So that's a lot of big move for today, and we anticipate that because we know that normally Monday, regular Monday is not much action. It's much like a range day or consolidation day. But this Monday is different. This Monday is special because it's the last day of the month and last day of quarter. So it's huge. It's packed with ton of actions. Yeah, right here. And we close our quarter three right there. That's our close out quarter three. Yeah, so tomorrow it will be start a new quarter. So if we look at the quarter right here, is quarter three right there from July to September. It closed out. Yep. So pretty much we're in very bullish right there. The first three quarter. So let's see how the quarter three gonna gonna be. It's gonna be any retracement right here, or it's gonna be continue the uptrend. So that's the question that we have in mind when we trade the last quarter of the year. All right, so let's look at the charts for today. Okay, and before we go to the chart, before we go to the trading, we always have the question in mind that when the 9:30 open, are we gonna engage right away, or are we gonna wait for the 9:30 candle formation? That's the question that we at a day trade we're gonna ask. All right, that's the theory. Or we wait for this, or we don't. Okay, and let's find out. All right, so far we collect the number, the example, the use case where we don't have to wait for the 9:30 because the liquidity already ready or sweep before 9:30, so we just follow that direction without any waiting. One of the case we capture is happened on September 26th. I think it's a September 26th. Is that a Thursday? That's right. We note it right, Thursday. So we don't wait when we see that this. We don't have to wait because we have two things in our three things in our favor right there. So you have the London high. The London is above very high. It's a huge gap right there. So basically we have double top formation, right? Double top, or we call double rate right there. It rated liquidity buy side twice, both the London high and the prior day PM range, New York PM range right there. So twice right there. And the huge gap right there, and the London is tight cancellation. So we don't have to wait, and we already see the setup forming. setup reversal type 1 right there. You see that? So accuses is type 2, right? For breakout type 2 right here, which is you have test twice right here, 2 times right there, and it break and reverse. So when we go into 9:30, there's no need for to wait for the formation. We go ahead and short them. So that is one of example that we saw that happen. Okay, now look at another example. So here's the second scenario. We see that we don't have to wait for the 9:30. Basically, it's a 9:30 U.S. swing, so it's gonna swing exactly at 9:30. Going 9:30, we just go in and short them because we have similar right here. This is a little bit different, right? This one is the London range is inside the previous day PM range. This case, the London range is way above the PM range. Yeah, in this case, the London is inside the PM range. So, but we do have a double rate liquidity at, you see right here at 8:15 on the London high, and then you have at 9:15 right here on the PM high. So you can have some kind. It's not perfect like the other use case, which is it rate both of them, both of the high of the London range and Friday PM range, but it still have double rate right there. If you consider that it rate at 8:15 and then at 9:15, which is an hour later, it rate the buy side and boom, it create a type 1 reversal right here, type 1 break, test from above, boom, reversal. So we can go in and engage right away. That's it, the Judah swing at 9:30 right there, Judah swing. So those two examples we collect so far where we can have a conviction or a high probability to go in and swing at 9:30. All right, let's look at the test for today. Right, for today at 9:30, what do we have? Let it finish. Okay, so here's at 9:30. What do we see? All right, we see that the open at midnight, not midnight, but the open at London, 18 hour, right, 18 hour, I think 6 p.m. on Sunday. It did rate in the previous day, but we don't like that. We wanted to rate after the open. So it did. It did rate both. You see that London and previous day one time right here. All right, so that come into our mind that, well, we don't want this, right? It just rate one time. We wanted to rate 2 times. We want the double rate. So that's the reason why we wait. We don't want to engage at the 9:30. We want the candle at 9:30 formation. That's perfect. But however, right here, we see the setup right here. We did see the setup. Okay, the setup happened right here. You see that this low break, test from below 1, 2, 3 times. So this one is gonna be break it. So that's the reason why we did take the trade right here, and it did good. We did have 2R. Look right here. Right here's what we. Yeah, we did the recording before that. Yeah, let's take a look at the recording the trade. And here it's not much clearer, but what we look right here, we did mark right there, we did took the trade. Yes, we draw later, that's why it not show up. But we did entry right here because this one hit this level, so it gonna be, break that level, but actually it retrace, and the next candle it break it up, so that the trade is still valid. So let's see. Yeah, here's how we engage in our first trade. You see that level right there, right? You see a break, test from below 1, 2, 3, 4. 3 times, and when it's gonna touch the level, then it's gonna break. That's what I anticipate when we use our model. Let's see our model. We have the model we have right there. Let's see. All right, here's the model we have. Is a type 1 reversal. Right, it's a long setup right here. Right here, it's a type 1 right there. See a type 1 reversal, breaks, and then test from below that level. That's 1, reverse. So that's an idea right there. But in this case, it tests 3 times, so it's gonna be explosive. That's what we anticipate. But the funny thing happened is that right here. So perfect, yeah, it's the setup. We do it right. We do it right, but it flipped. So very interesting. But we're still in the trade because it did not hit our stop loss. You see that? And it did not have a sell out. And then boom. When it goes to the 930, yeah. Yeah, we stay in the trade. The recording is cut off right now. Let's open the next recording. So that's yeah, here's the follow-up on that trade right there. So we are, see that, yes. So we still in the trade, and you see the heel run right there. Yeah, at one point it get 2R right there. If we aim it right at that level, we should aim at that level 2R right there. You know, the first run is not gonna get the heel run right there, because you see that it's gonna sweep liquidity one more time before it make a heel run. So that's one of the lessons we learned. When you look at liquidity, you don't see that it's gonna make the 3R move, then aim for the low hanging fruit right there, which is the key level breakout from the PM, which is at 57.90. Yeah, at 59.790 right there, which is this level right there, 57. 85.75 right there. You see that? 89.75. We should aim for that, and it did hit that level at the 930 candle, and we have a quick 2R right there, beautiful 2R. But anyway, we learn every day, and little by little we learn every day. The key thing for us to learn is to see how liquidity run. As soon we understand the mechanism, the quick run or price delivery model, then we are in a very good shape right there. Yeah, you see that as soon as it hit that key level, it retraces right there. So our first trade perfect right here, right? We enter right here and stay right there. So that's how we engage the first trade. Okay, so go back to the point we try to make that, wait for the 930 formation right here, and then we're gonna see how it play out. Okay, so right here after the 930 formation, we thought I'm gonna rate because we see only rate one more time. So it on a rate the liquidity only one time. But look at the second time it rate. As soon as it rate the second time, you see that it explodes. So basically expansion and then it reverses right away. So we can call this consolidation, or no, it does consolidation, expansion and then reversal, and then reversal and then expansion, something like that. It's not always clear. It depends on where you pick it up. But one thing we know for sure that it's not gonna be expansion go to consolidation. Expansion is gonna be retracement or reversal. That's it. So basically, you see that when the double rate happen, it's reversed. So you can consider this is a Judas swing. It's not really a clear move, but it gives out an indicator. You see that as soon it break out at this level, and it have another range candle right here at 11:30. You see that as soon it break out that level, boom, you're looking for reversal, which is right, break and then test from above. Actually, this one did not really touch the level. Low is 94.75, and this one is it's just one pip above, but it's still a decent setup. If we miss right here on break, take from above, and look at the 930 right there, you still have a chance going right here. Right, you look at the level at the 930 right there. You see that level, it break with a fellow gap, and this guy is just fellow gap. It retests and boom, the short setup coming right away. So now we can get a little bit idea after today. We see that how the liquidity run right there. So you will look for the double right here, double burst right there, and then boom, it's reverse. So a previous low right there, right? You see that. As soon as it break that low, then it reverse, and then it hit it right London, because London is in the range. You remember the story that London is in the range, inside the range. Then you just wait for it to double rate right here. Then boom, you can go anticipate for the reverse. Look at the symbol we have. Well, we have the London, yeah, right here. But however, this one we have to wait for the 930. It's a little bit different. But we do see the double rate right here on the buy side liquidity for both. And this case is we wait for 930. You see that as soon it rate, wow, it reversed right away. And what's the level is this one? It is level, yeah, we have to see what level it is and make it a very sensitive level that it reversed from there. Yeah, that's a 1 hour time frame, but you will have another level on the better level on the daily time frame right here, which is, you see that level right there. Yeah, let delete it level, so we have a level right there. This level on the daily.
The markets are open.
All right, markets open for the Tuesday. So what is the low of this? 57.68. All right, perfect. So let's see. Yes, so that's the level for the daily time frame right there. It bounced back from that level, and we see that, we know that the next step is gonna hit London high and the previous BM high right there. So you're gonna have a huge run right here. when we hit the level, then we know that it's gonna go and get that level. So you have a 37, almost 40, right? Almost 8R right there. So that is how we see the liquidity run. So the bottom line for us is the reversal trade right here. It's the key right there. We're gonna do the right up right here, so we see that the double push liquidity right here at 7, and then at this one at 14, and this is the 930, right? All the key level right here. So this one, no, let's do right here. So this one is 7. So 7, you have the sell-side liquidity rate right there. You have sell-side liquidity at 7, and then you have another. This one is at 14, 2 p.m. Yeah. Let me into the left. Yes, so you have, we're going to have a time-based reference right there. So basically we have rate 1 and rate twice by side liquidity and reverse, and the target gonna be the previous day high right there, or the London. You see that? First it felt London and now gonna break that level, because there's huge liquidity right there. That's the reason why it make the second push or second rate right there. Then you have explosive move. That's the beauty right there. And we have right here, it's the 930, and right here we have one more reference right here, is a 12. Maybe yeah, we want, okay, so this one, so this one is 930. Awesome. So you have 930 right there. Okay, let's take quick screenshots and we do some right up right there. So this mainly for the liquidity range setup. You see the double push, right? With double push at 7 and 12 at 14, 15. Double push, social liquidity, and then it's reverse. So basically it's expansion and then it's reverse. So all right, so if we look right here, we're gonna see the 4 breakout at that level, right? The low of the I-30, because you have break and break and it reverse back right away, and this one's supposed to break it, but it failed to break. So that is called, it's not in our, the setup we have. Alright, so basically we gonna edit this one. The setup we have right here is to go with this. So we're gonna have liquidity run DT run analysis. So basically we have what? We have the London range is inside we can see the 4 breakout at that level, and then we can trade that, and then we trade the reversal also. Or either of them, we can trade both, that would be great. Inside previous day BM range, that's the condition we have. And then we have double break. In this case, is social liquidity, which is at 7 o'clock, the low of the 7. So it's right here, and the 14, 15. That's it's the liquidity run we saw right there. So we can play a reversal. Do we see any 4 breakout? Yeah, basically if we learn the liquidity, then we can see. But do we see any 4 breakout at big level? We can see the 4 breakout at big level, right? At the level right here, this candle. At yeah, we have a setup right here. We have a 4 breakout at the 57.94.50, which is the candle 11:45, 11:30, 11:30. Is that right here? Yes, the 11 candle is the one that set up the reversal, 11:30. So 11:30 set up the high, and that at the level that we're gonna have a 4 breakout right there. So basically it's a reversal type 1. It's just 1 pip above, but it's okay. Basically we have a break, and then we have a test. It break at 12. Test from above, and then it's reverse. Yeah, even though we not see any sell on the reversal right here, but if we understand the query how it run, and the double rate right here, then a strong a strong conviction we can go in. But right here, the short setup is very good setup right there. We see that it's it did rate the London, but it did not rate the PM. So that's, we can put the note right here. That is the London ran buy side liquidity rate. So it's a decent setup, right? You want it to be double rate better, like this one, double rate right here. The double rate liquidity right there. All right, let's save it for now. Yeah, we have to put a keynote right here. So we do wait for 9:30 candle formation. We don't engage right away. That is one of the conditions right here. I think we do see the same right here. We wait. Yes, we wait for 9:30 candle formation. and 4 breakout. At last range, all right, either high or low of 930. That's an idea right there. Yes, so we have beautiful setup today. Let's save it. All right, that's it for today. We ran out of time. Thank you for your time and interest. We're always grateful for this opportunity. We do what we love, then success is coming our way day by day, little by little. In every way, we're getting better and better. Thank you and have a great evening and see you tomorrow.